Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Langa Madonko, investment principal at Summit Investing. Langa, thank you for joining us.
Thank you for having me.
I should announce you by your title, right? Mr. Africa. Sorry, I apologize for that.
No offense taken.
What are we talking about? Talking all good things beverages on the continent. Last time we spoke beverages, you promised to bring some beers on the show, but let's not talk about that now.
I was promised the show would be on a Friday.
This is awkward conversations. Anyways, moving along swiftly.
Yeah.
The gorilla in the room is, of course, the big transaction with SABMiller. Where does that leave the beverages sector within the continent? What is the outlook like?
I think the transaction between AB Inbev and SABMiller was something very significant, and also significant in terms of the continent and the beverage space, because there were lots of agreements that SABMiller was in for distribution rights in terms of also partnerships with the likes of Coca-Cola.
What happens with those deals?
So some by conscript of the competition commissions across the world, they've had to let go.
Right.
So you'll find that, for example, now in South Africa, Miller is going to be distributed by Heineken, and across a lot of other territories, some of those shifts are also starting to happen. So it's been come with its own pros and cons in different spaces. But also you've noticed that now they've had to discontinue to a certain extent the relationship that they would have had with Coca-Cola.
Right.
So it has had an impact on what the landscape looks like, in some instances to the positive, and in some instances marginally, I think, to the negative.
Okay. Does it actually make a difference to their competitors, their listed competitors who investors out there would be looking to gain access through?
I think it does. I mean, it has created a behemoth of an entity that will also be now, through the relationship between SABMiller and AB Inbev, bringing in new brands that were traditionally on the AB Inbev strategy. And we also know that the guys behind AB Inbev are known for their mechanical efficiency and how they optimize the performances of their businesses. And we're looking to start seeing some of that efficiency starting to roll through what was previously the SAP infrastructure.
Yeah, traditionally they haven't necessarily been big in emerging markets. Will those brands do well on the continent? Should people be worried again?
No, so I think the strategy there would be to continue with the brands that have already been in the SAP stable and continue to distribute them and continue to grow them. But you'll find that in certain spaces, because like I said again, of the requirements of competition commissions for some of these transactions to go through, they will start to find that they've got spaces within their brand universe where they can start to take brands from the AB Inbev stable and start to see if they can test them across the African continent.
Okay, let's drill down from the big picture to specifics. In terms of in your guys' mind, who stands to benefit the most? Who stands to miss out the most from this transaction?
So I think some of the beneficiaries, like I said before, have already been Heineken, who is distributing the Miller brand,
right.
Which SABMiller had to let go of in order for the anti-competitive nature of the transaction to be mitigated.
Sure.
And I think also you're starting to find that some of the other parties that had agreements with SABMiller in the past are also now rejigging their businesses. Coca-Cola and its agreements with bottling and distribution has also had to undergo a considerable restructure, where they were able to buy back a significant portion of their distribution rights, if I can put it that way. You're also starting to see that some of the other players who would have been deemed secondary are starting to gear up and try to take advantage of those brands leaving in particular territories.
As an example?
As an example, Distel is now looking to start setting up a production plant in Angola. You are seeing more Mozambican producers now starting to upscale their plants. You are seeing growth in terms of the beer manufacturers that are based out of out of countries like Ethiopia. For example, again, Diego are scaling up their production and their output in those particular territories, and also are benefiting also from the introduction of the new brands that they were able to acquire distribution rights to.
So it sounds like this actually, in a perverse way, may facilitate greater competition on the continent. Does that mean then, from an investor perspective, you should be looking out for more opportunities to acquire within the space?
Yeah, so I think traditionally everybody would have been looking at SABMiller as the only real Pan-African player, and this has opened up opportunities for other people to start stepping into those spaces.
Right.
And obviously, as investors, considering that the market in Africa, though I think the number should be much bigger, is valued about $60 billion a year. Obviously, the opportunities now, as some of the other players try to strengthen or flex their muscles across the continent, the opportunity is immense for the investors to start participating in that space.
Okay. From a regional perspective, where does this leave, as an example, the East African players? You touched a little bit about Uganda. In Tanzania, how does that affect the competitive landscape there? What is the outlook like, I guess, then for each of the regions from a beverages perspective? So
you still tend to realize that the majority of the players who will be wanting to take advantage of the opportunity are players who are already in those particular markets. So in the East Africa region, for example, everybody will be looking to say, look, where's the opportunity? What gaps have been left by this particular transaction? And of course, you'll find that one of the most obvious ones is in the category of premium beers. But one of the factors that we're noticing is that a lot of the manufacturers are now strengthening their position in terms of their production of local brands. They're using that as a key point to fulcrum themselves and pivot themselves towards their next phase of growth. So they're saying, look, where SABMiller may have lost brand rights or lost distribution rights, what can we do to squeeze ourselves into that particular market space and to do it quickly? And I think we'll continue to see that East Africa will be one of the countries that will, the non-SABMiller linked beverages will be the ones that will accelerate and do faster because of the regional integration and the play it has there. And you also see a benefit also within the SADC region for other brands that previously were not as competitive compared to SABMiller, like, for example, the unwinding of the relationship between SAP and Distel gives them the opportunity to expand not only within the region but also within the country. And like I had mentioned before, they are already looking heavily into investing in Angola, where they invested $20 million into a plant there last year.
Okay. I guess then that touches a little bit on the volume side of things in terms of the potential to grow volumes. How does this transaction affect, and this is probably a more difficult question, how does this affect then the margin equation? You said a little bit about on the premium side of things, you may see more premium brands going to the market. Does that mean that we should actually be on the lookout for potentially higher margins?
Yeah, I think that will definitely be one of the things that will be happening because some of the older brands, like I said, as they start to take over some of the brands that SAP can't distribute anymore on the continent, it's more of those brands that are more in the premium space. So many of these businesses will be delivering better margins. But however, I think there's still going to be a great push in terms of the more cost sensitive brands as we continue to talk about the story of a growing middle class. But however, I think one of the things that we have to pay attention to is it's going to also be a function of, with any new brands that come in, how quickly do the customers in that particular market take to those brands. For example, if AB Inbev starts distributing its brands on the SAP platform, how quickly will people be receptive to those brands?
Okay, so if we then move from the regions to then individual companies, which of the regional players do you have an eye out in this environment to have the better chance of taking advantage of this?
So I think at this point in time, what we're doing is we're looking across the entire horizon and to start to see who's going to be the most aggressive in terms of taking advantage of the opportunity.
Who's likely to be more aggressive?
And I think, of course, the guys were originally the big boys in the particular markets. Like if you look at Mozambique, you'll be talking of guys like CDR.
Right.
If you're looking of East Africa, you'll be talking of guys like Diego.
Yeah.
And then you'll be now trying to look at it from a country-by-country perspective, and then also looking to see who has the best infrastructure to pivot into the next phase of their growth from where they currently have a presence. I think, like I had said before, our very own Distel now going into Angola, that opportunity presents them with a distribution channel to follow the west coast of Africa.
Right.
And it's only a function of how quickly are they able to take up the opportunity that now presents itself.
Okay. I think we've broadly focused on the positives for the beverages sector from this transaction. What are the risks? Do we potentially have a much stronger SAB or a much stronger combined company that can then regain whatever lost market share they have as per this transaction and gain even more? Is that a risk going forward?
So I think one of the things that we're probably going to see is there's going to be a slight slowing down at first while they try to integrate the two systems.
Right.
But I think the guys at AB Inbev are adept to integrating acquired companies into their business. However, also that having been said, I think the size of the company itself will also result in a slight bit of lethargy in terms of how quickly they're able to execute. And then, of course, they're also encumbered by some of the provisions that were inserted by the Competition Commission in order for the transactions to go through. For example, in terms of optimizing staff account, they can't retrench for a particular period. They are locked down to say no retrenchments within that particular period.
Sure.
They've had to let go of brands that held significant market sway for them, and now finding a strategy as how to replace those brands and with which brands within their existing stable will also be something that will be time consuming.
So overall, is this a sector that you are bullish on? Are you going to be drinking lots more beer, excited about the outlook?
Yeah, I think this is a sector that I'm excited about the outlook. I think that transaction has come with a lot of positives. And I think, like I said, one who finds themselves in a position where they're already holding some of the more key companies in their portfolio should hold on a little bit, and let's see where this drives out to.
Perfect. Let's leave it there. Thanks to my guest, Langa Madonko, Mr. Africa from Summit Africa. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.